Hey everyone, welcome to this new episode. I'm today with Pravin from Flowdesk, who is trading options from London here. Pravin, it's good to have you. Can you maybe start by introducing yourself?
Hey, pleasure to join you guys. My name's Pravin. I'm in London. I trade derivatives for Flowdesk. I joined Flowdesk nearly 2 years ago to kind of build out the OTC derivatives trading function here. And our remit is essentially we trade exchange listed options on Deribit and Paradigm across all underlyings. And we also provide OTC derivatives liquidity to our OTC clients. So
Okay,
we
nice.
trade all across the top 500 sort of coins, even further out, calls and puts, and more exotic and structured products as well.
Yeah. I guess we'll get back to what Flowdesk do in the next question, but maybe could you start by giving maybe a bit deeper introduction about yourself? I think you're coming from TradFi and years of experience, and that Flowdesk is your first job in crypto, right?
Yes. No, well, actually, no. So before Flowdesk, I was at crypto.com for a couple of years.
Oh yeah.
I traded crypto options there. But previous to that, I traded equity options at a market maker in London. So I started trading single stock options about 15 years ago, focusing on the European single name sector, which is unfortunately not as interesting as the US single stocks world, or even the Indian single stocks world, or other markets. So the European single stock world's kind of just a bit boring, just being a market maker there. From there, I moved to trading more index options, equity index options. So that's Euro Stoxx, DAX, S&P. And then I moved to trading a few more niche markets. Actually, by the end of my time in traditional finance, I traded some Chinese commodity options, which was quite interesting. High vol, crazy hours, and also doing sort of a world cross asset volatility market making book. But I was always interested in moving to crypto, especially when kind of it all started kicking off in like 2018, 19. I was keen to set up a crypto options desk at my traditional finance market making firm.
Okay.
But it just couldn't get the approval from the owner. I think
Yeah. So what made you want to do it? Is it because you saw how volatile the market was?
I think multiple things. Volatility is obviously one, but the liquidity and the volumes were high, right? If you compared sort of Deribit BTC volumes in like 2018, 19 to like, let's say, Euro Stoxx options volumes, there was no comparison. Deribit was already bigger. So, and then
Okay.
the stuff that was going down on Paradigm, like at that time, was big size compared to the blocks you would see on Eurex or such. So, yeah, there was no sort of nothing stopping us from doing it. The options are fairly simple. I always viewed BTC as a move in the same way as sort of equity indices at the time. So it would have been a natural thing to move to. So when I got offered the role to move to crypto.com, it was something I really wanted to do.
Okay, sounds good. Yeah, I didn't realize how much liquid Deribit could have been in 2018 versus Euro Stoxx. So I worked on equity derivatives desk as well on the sales side, and we used to sell a lot of auto calls and structured products on Euro Stoxx basically. So I always assumed it was the main index market for Europe.
Yep. It was about a time that Euro Stoxx options was starting to become very screen based. So there wasn't much flow. Yeah, sorry about that. So it was about the time that Euro Stoxx options was kind of, I guess, dying down a little bit at that time. And so I was looking at other markets to trade, and yeah, the volumes on Deribit and Paradigm at the time were really skyrocketing. And you always want to be you want to get involved as an options market maker when the market's early. Everyone does. Spreads are wide, lots of edge to be captured. So that was the idea, really.
So would you say the market is not as early? Like, obviously, it's not as early as it was in 2019, but we still see it as being early, right? Even though, like,
absolutely. I mean, I think it's weird to say, but I find the BTC and ETH volatility market super, super efficient. If you compare it to like, even equity index options, when the markets are stressed in those worlds, liquidity really changes a lot. Whereas what I find in the crypto options world is even in a very stressed market, there is good liquidity. Seems to be the case, which is good and bad. I mean, it's good for external people. If people who are not in the market, like if you think about an institutional player, it's a really good thing to know, because you want to assess how good is my liquidity in a stressed market.
Yeah.
The market maker perspective is difficult because you're competing against very, very efficient market makers. But for the industry and the market as a whole, it's very, very good.
Okay, that's interesting. Yeah, because from my point of view, I would say indeed the liquidity can be good even in stress events. But we still kind of lack capacity in terms of liquidity, meaning if someone really wants to move size, except a couple big names that everybody knows in the market, it's hard to move size. Like if you keep buying the same call, the same strikes all day long, you will significantly get worse than the price at the end of the day. And whether with banks and like in TradFi markets, you can go to a handful of counterparties. Here the spectrum is more limited, probably.
I mean, what I would say to that is the exchanges are transparent, which is a good thing, and there is still decent off-exchange flow that is going on. We see a lot of off-exchange flow in the majors, especially. We will trade covered calls with our OTC counterparties, and so do other people. Whether that affects the exchange flow, of course it does, but I think it's still it is a question to be asked, I guess, because I think a lot of people out there are thinking, if I want to trade 1,000 BTC clip on the exchange, be it through Paradigm or direct on, then everyone sees it and they're worried. And there is a case for that. But what I would say is that from the market makers who provide the liquidity on these things, those market makers sometimes have offsetting flow, which is also off screen. So generally what I found is when those clips are going through, it doesn't affect the vol as much as you think it would.
Yeah.
That's what I would tell the takers, essentially. They're not moving the market as much as they think they would with their flow.
Okay, yeah. Interesting feedback. And so, yeah, I guess it's structurally different from especially what you saw at the end of your career with more exotic options, like or more exotic underlyings, but probably still not as efficient as NASDAQ options or US equities.
Of course not. I mean, but then I think, those markets have been existing for what, 6 times the amount of time that we've had crypto options. I think where we've gone from, I don't know what, again, I forget the year it started, 2018 to now is quite incredible, right? It's a very efficient, very professional market. And I think it's proven its robustness across different volatility regimes. We've been through different vol regimes in the last 8 years, right? In crypto, we've seen 100 vol, we've seen 30 vol on BTC. So, how many times does that happen in the equity world? And even in spite of those moves in vol there, the flow has been good. I mean, market makers have been there, liquidity has been there, the volumes have been high. So I think that shows the robustness of the volatility market.
Okay. And so what have been the biggest shifts you've seen in the crypto options market since you started?
I think it's becoming more and more professional. There's clearly more and more kind of what I alluded to earlier. There's clearly more and more structured product flow and off exchange flow that is going on, and it's going the way of traditional finance options markets, where what you see on the listed vanilla option side is derivative to the big flow going on out there. Often, I feel, which is a good thing. I mean, that's the way that we all expected this market to go, and it's good that it is going that way. And it will be interesting. So, for example, we don't have stuff like volatility indices yet. I mean, there is, but nobody really trades them.
Yeah.
It'll be interesting to see once there is more institutional adoption, whether there is real demand for those that provide sort of the fixing for more structured products out there. But I can see that market really developing.
So one of the main things you expect coming into crypto options would be structured products. I think lots of people would agree with that. And on our side, we've seen a significant increase in the flow coming from structured products. That's a good point.
We see it in the OTC side of Flowdesk as well. A lot of our clients are looking for more sophisticated products out there.
Yeah. So you would say people are getting more sophisticated in general?
I would say that what we're targeting is more of the clients who are trading more sophisticated products. I don't think people are getting more sophisticated. It's just that the clients who are going to do the big size on crypto underlyings are going to want more structured products rather than trading more anything too vanilla.
Yeah, which makes sense. Are there any to keep going on this TradFi to crypto topic? Are there any mistakes that you've made or that you've seen people make when they made the move towards crypto? Maybe because the crypto in the options in crypto are a bit different, like with inverse options, with on derivatives or things like that.
I mean, of course, the inverse options thing, you have to get your head around it. I remember when I was first looking at this, when I was in TradFi, trying to figure out what my delta was always a bit of a fun one. I think from the very basics, you need to understand, are you making money in BTC or are you making money in dollars? What are you trying to do? But in terms of the mechanics of the vol and whatnot, once you get your head around the inverse options, I think there's nothing much different to trading these cash settled options to any other cash settled options out there. I think people often overcomplicate it and fail to understand that the mechanics of the options are very, very similar, and also the vol dynamics are very similar to what anybody's experienced. If you've traded equity options in the past, the skew dynamics of the vol curve kind of work the same. In crypto, I've found, market down, vol up, market up, vol down sort of thing. And you can count on that sort of dynamic 80% of the time. So especially in the current regime we have, it might not have always been the case, but where we are currently, I feel everything is very, very similar. I mean, that's personally how we trade. I trade it similar to how I used to trade equities.
Okay. And yeah, you're coming from an equity options background. Lots of people in crypto options are actually coming from FX options background. Like obviously people going from options background, but I think most of the scene is currently from FX options. So would you say there is a difference in which you approach the market versus those FX guys?
Yes. Yeah, 100%. I work with some. I guess I think of the market a little bit more simply. Those from the FX background and then I've been converted a little bit, pushed the idea that this is leading to a more structured product world, more exotics world. And actually, even on the OTC side, the clients we speak to, those who come from the FX sort of background, tend to want a little bit more structured products.
Okay.
More interesting products, more exotic products, different strikes, different so add knock-ins, knockouts, add various different caveats to the option to make it less vanilla. Whereas those from sort of a traditional like the equities background tend to ask for stuff more simple stuff, I would say. basic call spreads and the such.
Okay,
So
interesting.
there is a difference. I guess you can call equities guys a little bit simpler than FX guys, I guess, but it doesn't matter. Both
Yeah,
can
it's
make.
very, very different market also. Like,
But I think there's a healthy mix of both. For me, I feel when I look at the BTC vol curve and the ETH vol curve, I think they behave very, very similar to, especially now, I feel they behave very similar to how equity indices vol curves behave.
okay. And so, yeah, I guess the team that you're part of right now is a mix of FX and equity people. So you probably can take advantage of this. Maybe you could say could you tell us a bit more about what Flowdesk does specifically in options? Because we know Flowdesk has this big one-stop shop for crypto that is involved in many different parts of the market. What do you guys do in options? And I think last year there was some headlines around Flowdesk being very active in HYPE options, one of the main market makers for these products OTC. So it would be interesting to know more about what type of flow you guys have been seeing there.
Yeah, so you hit the nail on the head of what makes Flowdesk kind of gives us our advantage, I'd say. What we feel is our competitive advantage is the fact we are a one-stop shop. We have a lot of long-term clients who we've served on the token market making side, and we are sort of seen as a trusted, we're not seen as one of the cowboy market makers. We are seen as a trusted partner for a lot of our clients. And the firm has been a very steady ship for now probably 6-7 years. So coming into Flowdesk, doing the OTC derivatives stuff and getting into options, we always had that sort of competitive advantage. That the disadvantage was we never traded options before, so you have to build everything from scratch. The advantage is you have a good name behind you who's trusted in the industry by a lot of probably people who are not so well versed in options. So we have a decent client list. And that brings on to what you were saying. A lot of our clients, especially last year, are quite well versed in Hyperliquid, integrated into the Hyperliquid protocol and everything that goes around it. A lot of big players there. And at the time, there was no sort of hype options market.
Yeah.
Say now there's a few places out there, but still, in terms of if you want big liquidity and want to do big size, anything you want to do on hype is going to be OTC. So we traded a lot of hype options OTC last year, to the point where we had a lot of two-way flow, and we could really generate quite a robust vol curve based on the fact we had buyers at certain levels and we had sellers at other levels.
So what kind of trades were the people coming to you for the hype option we are looking to do?
So you had a mixture of two-way, really. You have a lot of long-term hype holders who were looking to generate some yields. So that's your basic covered call strategies, selling upside calls. So they're your sellers. You also had hype accumulators who, again, more vol sellers who were looking to sell downside puts. Essentially, if the market ever pulled back, they're happy to buy at these lower levels. And then on the flip side, we had a lot of guys who didn't hold hype, but they're more like crypto funds, crypto punters, high net worths who wanted to participate in any sort of hype rally. So buyers of longer term call spreads, stuff on this front, upside calls, buyers of upside naked calls, call spreads, they would come to us. Because at the end of the day, because we had the offsetting flow, we could provide really competitive pricing. We're not charging upside hype calls at some ridiculously high vol because we would have bought it for lower. So we're happy to sell it. And I think a lot of our counterparties who came to us said our pricing was very, very competitive compared to others because we could.
Yeah, so it's almost like a snowball effect, basically. As much the more flow you get, the better your price is, and
that's all it is. And I
more
think
they
we
can
have,
you.
and we still like to think we have a decent advantage there. It is probably the coin that is probably next on the list of exchanges to list. Clearly, I think it's interesting, and everyone can see the flow out there. If you talk about anything outside the top 4, then I think that's the next one that really has sort of a decent flow coming.
And are you guys seeing any interest on options for other alts at the moment?
We, as at Flowdesk, we're willing to provide liquidity on anything, as we said. So we will trade options, especially a lot of our clients go with the flow, I'd say. For example, sometimes we might see some interest in Potenza. Sometimes we'll see interest in Asta. Sometimes whatever the name of the day is, we will get clients asking for us because sometimes they just rather buy a derivative than buy spot. It's more capital efficient. But in terms of rigorous, consistent one is probably hype that we always see. And that could just be because that's where we're positioned in the market. Everyone knows come to Flowdesk for hype options sort of thing. Or it could just be a function of people see hype as kind of the de facto altcoin. If I want to invest in alts, I go hype. So
okay, interesting. Is there any trend in particular that you've seen in the past 12 months that has been particularly interesting to you, a trade you've done or a trade you've seen in the market, in options?
In the majors, I think difficult one. It's not like been one consistent trade that has the market has been, to be honest, it's been quite difficult to trade, right? The past year. It's not been easy because we've had a lot of geopolitical events that have kind of popped out of nowhere. Whenever you have that, it's a difficult one. As an option market maker, you want to stay long gamma as much as possible, but it needs to pay. And for a lot of times, we had periods where it wasn't paying off. But then you have events like 1010, and then you have Iran in the past year. Those two events in itself can pay tenfold all the decay you paid over the whole year. It's just about timing. It's very difficult to time it in a market where you can't predict geopolitical events. People don't want to hold the gamma or vol because it's expensive, right? And things aren't always moving. If you look at BTC over the past few days, we've been sitting around 80 to 85, just kind of bouncing around. We're not moving. Same with ETH. ETH hasn't really moved as well. So you get into this paradigm where you want to be short vol because it seems to be the way. And then suddenly a geopolitical event happens. Or you get expectations. And so you don't want to get caught. I think especially 1010 is still fresh in every option trader's mind, right?
Yeah.
The market was crazy that day, and therefore tail risk is still on everyone's mind. So people are always going to pay up for tails, and they become expensive and they cost. So it's difficult, but you kind of have to play that game at the moment. And we've seen this in traditional finance as well. I've sat there for 6 months, a year, holding vol when nothing's moved, but only because as a sort of a protection against what happened the month before, the year before.
So I 1010 is very crypto native type of event. I think in the last 6 months we've seen maybe a turn into more a macro ecosystem. Basically, you're probably more looking at what Truth Social is saying versus what crypto Twitter is saying these days to cover your book. Is that the case for you?
Yes, I think 100% everything's becoming a little bit more correlated. And with the whole tokenization push that's going on at the moment, I think everything's just becoming more in one place. So people look at equities and crypto and everything together. I think tokenization has really pushed that. So yeah, I guess I find myself looking at oil a lot more. I find myself looking at S&P and Nasdaq a lot more. I find myself looking at strategy and Nvidia a lot more, and a lot more stocks. So yeah, there's a little bit more correlation out there. People are trading all these things in one place now, which means I think you get a little bit more correlation. So yeah, what you look at is a little bit different. Do I look at more crypto specific news? Yeah, you're right. It's starting to change a little bit, which I think is a sign that the industry is advancing.
Yeah.
I guess because it's the same. When the industry advances, you look at more macro stuff rather than just micro stuff.
Yeah, I think that's the clear feedback overall, and I think that's probably for the better as well. And we've seen RWAs being like this one giant category basically for the past 10 years in crypto. And now it's actually, yeah, you can actually do tokenized equities. You can actually use blockchain for FX. You can actually have a full category for each one of those RWAs, because you cannot just put all eggs in the same basket in that way. And I think that's one of the most interesting trend that is currently in the crypto scene.
100%. It's definitely a focus this year and the next. I think all crypto firms are looking at the RWA market and thinking, where can we help? Where can we profit from this?
Yeah. Are there any plans for you guys in the options market to do, I don't know, tokenized equities options, or?
Yes, it's 100% a thing we are looking at. We already offer options on tokenized equities to our OTC clients. And we are looking to also help on the exchange side. I know there's a lot of chat about launching tokenized underlyings options on them, and we are one of those market makers who are very willing to help there, because we have a little bit of flow OTC for this stuff as well.
Okay. I think that's definitely one of the key things that will help grow this market, is basically the ability to do, I don't know, structured products in a permissionless way. And basically one of the things we've seen is in stocks, if I hold, I don't know, some Nvidia stock and I want to do a structured products on that, as a retail investor, even if I have like $1 million worth of Nvidia stock, it's very hard for me to get yield on those, because I would need to have a private bank or something. Like, it's not really accessible products. And so what we're seeing right now is the trend towards vaults and what we call VTFs, so basically vol traded funds, which would be essentially a way for vaults to have the ability to trade just any type of strategies. And I think with those, like, if you take in one hand tokenized stocks, and in the second hand the ability to add this tokenized stock into some kind of vault and do, I don't know, Nvidia plus covered call, you could basically give investors the ability to access into a vault, a VTF, that is just this strategy, Nvidia plus covered call.
Completely agree.
Things like that at this moment.
Yeah, and I think, kind of on that, we would Flowdesk, we're trying to position ourselves on both fronts of this, trying to help on creating the products, the structured products or the vaults for our clients, but also providing liquidity for those who create the vaults to then hedge. So, okay, you create the structured product vault, and then you need to sell some Nvidia options against that or something. Then we'll also provide the liquidity on that side. Whether that comes through an exchange mechanism or others, then that's fine. But yeah, we believe in both, definitely. I think I think both of those things are going to be huge for the industry going forward, and I think that's where the real growth is going to be. And I think Flowdesk, we want to position ourselves quite at the forefront of that. Definitely, it's definitely a push internally, and we're already big market makers on tokenized equities and the such on multiple exchanges, and we provide liquidity on tokenized equity options as well. Not in huge size yet, but we're really looking to really push that.
Nice. So would you say vaults and VTFs in general are like the next evolution of ETFs?
I think so. It will be. It's going to take some big money to come in, definitely. But I think as you say, I think the key is getting the smaller investors, those guys, as you mentioned, the guys who can't access the big private banks, but still want to, invest their funds in some sort of managed system. I think that's where this becomes really interesting, because there is a lot of middle money out there who can't access the big structured products, but they want some sort of structured mechanism for investing in equities. And this is something that could really provide that.
Yeah, that's my opinion as well. I think probably hedge fund strategies and very sophisticated stuff might be a bit out of range for like the middle money. But you can still do very basic strategies and you have no way to access them as a retailer.
That's
Like
exactly
I have my ISA, and in the UK, I have a bunch of stocks. I cannot do anything with them. If I would just long those X stocks somewhere in some tokenized way, and also the tax environment would be more favorable into doing that, I would happily sell covered call on my holdings. Just constantly generate yield as I'm doing on my Bitcoin, for instance.
Absolutely. I think that could be the real interesting push.
I guess to wrap it up, do you have any exciting topics that you are particularly looking forward to in the crypto space or in option in general? Are there any particular corners of the market that are overlooked, maybe, that you think are the next big interesting things we should look at?
I mean, I think we've hit the nail on the head at the end there. I think it's the tokenized world. That's really going to be the next sort of step for the next, let's say, 6 months to even 2 years. I think it's all about that drive to push, especially derivatives on tokenized equities and commodities, just RWAs, whatever word we want to put around them. I think there's huge opportunity there, and that's kind of the part that I'm really quite excited about, because again, yeah, I work in crypto, but I still have my equities hat on. I'm an equities trader at heart, and I think it's great to bring those two things together. I think there's such an opportunity for so much more money coming into the ecosystem and more people accessing liquidity. It's just great for everyone all around. So I think that's really the interesting part for me. I think
the way I would put it is basically we've built this tech for the last 10 years, and it's a good tech, blockchain and everything, but we've been using it to trade shit coins basically until now.
I mean, they're not all shit coins. I mean, but
not all of them, but most of what we've been doing is using Launchpad, and like Solana is only used to gamble on random coins. And I think trade XYZ specifically, and generally this whole trend of derivatives across RWAs is the most interesting one, because we are using this tech for something that's actually meaningful and that everybody should look into. Not just trade new coins or the new hot crypto token, but trade anything and use this permissionless and on-chain system to do it. And that just brings so much of the advantages we've been pitching for 10 years in why blockchain and crypto is the next big thing.
Absolutely. I mean, the liquidity is there now in the underlyings. If you want to trade S&P on crypto exchanges, you can. If you want to trade oil, you can. You trade Nvidia, you can get big size done for very little slippage. I mean, there's huge liquidity in these things across all, a lot of the crypto venues now that decentralized or centralized. So it's now building the derivatives part of that. I think is going to be a big thing. It's just like anything else. When you have an underlying with big liquidity, there's going to be demand for derivatives.
Yeah, now it's tricky in crypto because, like in TradFi, you have like the derivatives market and the swap market is probably 10 times bigger than the spot market, at least for equities. In crypto, it's probably Perps is a bit bigger than spot, but option is still not there yet.
Yeah, and having the Perps market is a bit of a dampener on like more non-vanilla, non-Delta One derivatives, but there's still huge upside, definitely.
All right, cool. Do you have any last word?
Not for us at the moment. I think we covered a lot today, and just thanks for having me.
Yeah, thanks for coming, man. Appreciate your insights. And see you soon.
Cheers. Thanks a lot.